In this latest video, I'm going to explain what exactly a 1 point or 1 pip movement is in the foreign exchange market. Hello, I'm David Jones. This is my latest jargon buster trading terms video with Trading 212. Now, this time around, we'll cover something that I think for a lot of people has become common sense, but I think if you're a new trader, it can be confusing. So we're going to talk about what exactly is a 1 point or 1 pip movement in the foreign exchange market. If you're new to foreign exchange, you'll hear people talking about trying to catch a 50, 100 point move, getting stopped out for 20 pips, and it can be confusing what these terms mean. So let's go right back to the basics. So what we're going to do first of all, let's take a look at what exactly a 1 point or 1 pip movement is for the 4 major foreign exchange pairs. Let's start right from the basics and look at some popular FX pairs to get our heads around the idea of what a pip or a point movement is. Here's euro dollar. So at the time of recording, the quote for euro dollar was 1.1990. So typically it's quoted to 4 decimal places, but in recent years plenty of brokers have started quoting it to 5 decimal places, so we might see another number here on the end in this example too. But this doesn't matter, okay? When we're talking about points and pips, it's all about the traditional way of how it's quoted. So euro dollar quoted to 4 decimal places, pound against the dollar, same thing, 4 decimal places. So it's this movement here. So if the market goes from 1.1990 and let's say the next price comes in at 1.1991, the market has moved 1 point. So it's the movement here, this 4th decimal place in euro dollar. If that changes in this example from 1.1990 to 1.1991, that is a 1 point move. So in foreign exchange trading, and actually for indices as well, it's all about the point movements. And this can be a bit confusing because if we look at this in percentage terms, it's a relatively small move. But of course, when we're trading FX, we're trading on margin. So we have a relatively large position looking to capitalize from small moves in the market. Let's take a look at pound US dollar. So at the time of recording, the pound against the dollar was trading at 1.3480. So again, it's quoted to 4 decimal places, and it's this last one here is the important one. So even if your broker has got another number on the end, it's the 4 decimal places that we're after. So it's the movement here that's the important one. So let's say we did a trade on pound US dollar, and we came in, let's say we bought it and we came in a couple of days later, we had a stop on, we weren't checking it, but we come back to it in 2 days and the market has moved to 1.3580. Well, that's a move. Hopefully you can see it here from 3480 to 3580. That's a move of 100 points. That's a relatively big move in the terms of the foreign exchange markets. So in percentage terms, that move of 100 points from 1.3480 to 1.3580 is actually only 0.74% of a move. But because we don't see currencies move 10% a day, this is why it's a relatively big move. And in point terms, it's 100 points. So hopefully that bit is clear. Let's take a look at another currency pair. So dollar yen's a little bit different, just to confuse things a bit. So dollar yen at the time of recording this was trading at 111.60. So dollar yen traditionally in the market is only quoted to 2 decimal places. But again, your broker might shove another number on the end there. But actually, when we're talking about points with dollar yen, it's the first 2 points that matter. So if the market moves to 111.50, that's a change of 10 points, okay, when we're talking about points or pips for foreign exchange. And just for the sake of completeness, a last one, dollar Swiss is another one that is quoted to 4 decimal places, so the same as the euro and the pound. So when we're looking at the 4 majors, dollar yen's the one that sticks out because it's traditionally in the market only quoted to 2 decimal places. So that's how points work when we're looking at foreign exchange. So as I said there, plenty of brokers these days will quote it to 5 decimal places if we're talking about something like euro dollar, but it's actually the fourth one that is our 1 point movement. That fifth one apparently is called a pipette. I never knew that before. You learn something new every day. But for euro dollar, pound US dollar, dollar Swiss, it's traditionally 4 decimal places, and for dollar yen, it's 2 decimal places. But let's take a look on the trading platform at some real markets to get a feel for what these point moves are and what are typical moves over the short to medium term. Let's take a look at some real markets just to reinforce this idea of points and pips. This is pound US dollar, 0 spread. So up here, this is the quote, 1.34872. So it's quoted to 5 decimal places, but what we are focused on, the market convention, is to quote it to 4 decimal places. So it's 135.85. So if the market goes from 135.85 to 134.85 to 134.84, like it just flipped to then, that's a 1 point move. So if you look on the chart up here, the highs for pound against the US dollar, 136.60, near enough, so 1.3660. That's the high set in September. And then it dropped down to lows around about 130, so 1.3000. Okay, so a move from 136 to 130, that's a 600 point move. Okay, so there you can see where, even though it's showing on the screen, as it will do, I think, with plenty of brokers and web charts these days, you'll see it quoted to 5 decimal places. When we're talking about points, it's the 4 decimal places that matter, and it's the 4th decimal place, that's the 1 point move. If we look at dollar Swiss, again, on the platform here, it's quoted to 5, but when we're talking about points and pips, it's this 4th decimal place here. So if the market goes from 0.9776 to 0.9777, that's a 1 point move. And just finally, if you look at dollar yen, there's dollar yen. So the market convention, and when we're talking about points or pips, it's all about 2 decimal places. So in effect, we can ignore the 3rd decimal place. So if the market goes from 111.67 to 111.68, then that is a 1 point move in these markets. Just for the sake of completeness, let's take a look at a stock market index, because that's, clearly it's a popular market for people to trade, and it's something again that gets quoted in points, not pips. Pips is very much an FX thing, so points is one that is used for FX and stock markets as well. It's a lot easier with this actually. This is the US 30. So at the moment, the price on the US 30, the market hasn't opened yet, but we've got 25,407. So for stock market indices, it's the number typically before any decimal point, if there was one. So for example, looking at the US 30, the Dow here, if we look at it way back, November 2016, the market was trading at 18,600. At the moment, it's trading 25,400 and something. So the market has moved nearly 7,000 points, from 18,500 to where we're trading now. That's nearly a 7,000 point move. So if the market drops from 25,408 down to 25,400, that's an 8 point move. So that's how this idea of points works when we're looking at stock market indices. So there we have it. It's a simple concept. If you've been doing it for a while, you just take it for granted. But hopefully, if you're new to foreign exchange trading, that has helped demystify exactly what a 1 point or 1 pip movement is. We'll start wrapping things up there. But as usual, if it's still not clear, if you've got any questions, just leave us a message in the comments down below. If you like the video, click on the thumbs up. And if it's the first time you've seen one of these, if you do a couple of things, if you click on the subscribe button there and click on that alarm bell notification thing down below the video, you'll get notified every time we upload a new video. And we do lots of things: technical analysis, foreign exchange, cryptocurrencies, all of this. So if you're subscribed, you never miss out. But for this week, from me, David Jones, and Trading 212, we'll leave it there, and I hope you have a good trading week.